G'day guys, welcome to the channel. My name's Tim, and on today's episode, we're looking at 5 things that Bitcoin has done on other bull runs: 2013, 2017, 2019, and currently in 2021, it's done 4 out of those 5. So let's have a look. This might give us some insight about what may happen next with Bitcoin. All right, so let's get right into it. So the first one I'd like to look at is the ground-to-ground bounce off the 200-week simple moving average. So this red line here is the 200-week. I've got it in a daily chart, so it's actually 1,400 days, which is the same as 200 weeks. And you'll notice that every time we have a Bitcoin peak, it starts at the bottom of the 200 moving average, it bounces up, and then goes to the bottom again. So there we have that in 2019. You'll notice in 2017 it was the same thing. If I go back in time a little bit, and I will take this off log so we can see this. Let's zoom up to 2013. Now, 2013 was a double peak cycle. Now, unfortunately, we don't have enough data to go back to draw this simple moving average. So I've had to draw it in myself, roughly where it would be. Now, what it would normally do is it actually have a bend to it, so it wouldn't be a straight line. It would look like something like it would be straight up like that, and then it would sort of curve up. But unfortunately, that's all we've got. But as you can see, we basically start from the bottom and we come up and we come down to it. So that would actually, this dotted line would actually have touched the bottom there. And then the second peak in 2013, we did the same thing again. So we start from the bottom, we go up, and then we come back down to it. All right, so let's go back to 2021, and so far this is how we're looking. So we started at the bottom here back in March 2020, and we've gone up, and now we're there basically. So, and that's how far away we are, or we're up about here at the moment. We've gone up, so that's the distance we are from the 200-week simple moving average. So we've done it several times before, and we're kind of 3/4 of the way through it. Now, for those that think that 2021 might be a double peak cycle, and nothing is impossible, but we have never turned around at this level and then gone back up again. On every other cycle, we always come down to it first before we bounce back up again. So that's what happened in 2013 when there was a double peak. Now, I would also argue that 2021 is already a double peak, and this 2019 peak was peak 1 because the 2018 bottom here also correlated with the stock market bottom, which I've gone into lots of detail in the other videos. So this is peak 1, peak 2 in this particular 3 to 4 year stock market cadence. Okay, so that's a lot to take in. It won't make sense unless you have a look at the other video. I'll put the link in the description and up here in the right-hand corner or left-hand corner, wherever it is, and you can see that other video. So first of all, so that's the ground-to-ground bounce off the 200-week moving average. The second thing that it's done on every single occasion is this ABC correction going and cutting through the 50-day moving average. So let's zoom into this one. So on 2021, we can see it very clear. So this blue shaded area is the 50-day moving average, and we did the A, B, C, where we had the lower low from here, and we had the lower high from here. So that sort of lower low, lower high cut through, and we end up underneath water essentially until we get back up again. So that pattern has played out every single time. So let's just have a look here. This is 2019. It is, yep. So we've got A, B, C. Then if we go back to 2017, the same pattern played out, A, B, C. And then in 2013, the pattern played out as well. It played out twice actually. So let's have a look at both of them. So we've got A, B, C underwater. And then up here, we've got A, B, C. So that ABC pattern has occurred on every single bull run as well. Okay, the third thing I'd like to look at is the downtrend bounce. Now, this is something that I don't think many people have noticed has actually happened on every bull run. So you may have noticed that over this period of time, we went sideways, but there was also a very clear downtrend. Okay. Now, a lot of people are looking at the top of the downtrend. I'm looking at the bottom of the downtrend. So I'll just measure how many days that was. So date range. So from here to here was about 64 days. So there was a downtrend. And what we did is we bounced on this downtrend like that until we reached a point when the bullish momentum started and we go back up again. And that's a hint about the next point, but I'll show you this happening again. Let's have a look at, there it is in 2019. And let's have a closer look at it in 2017. So we had this downtrend after we did the ABC correction. I guess it was part of that correction. So that's 2017. We're bouncing down until we reach a bottom, and then we change into some more bullish momentum. And if we look at 2013, okay, 2013 again, we had the same downtrend where we bounce down like this until we reach a bottom, and then the momentum changes and we have more bullish momentum. Okay, so that is the third thing that has happened on every single bull run. Now, I've just hinted this, the bullish reversal. Now, what I'm going to do with this one, I'm going to bring up another indicator. So I'll bring up the MACD, which I know a lot of other channels are talking about, showing the bullish momentum changes. So you can see at this point here, once we've bounced down, you can see there are some bullish indicators. So you can see we're starting to go in the green. You can see there's bullish crosses, and the momentum changes at this point. But if we look back over history, the same thing happened, and it didn't end up being a double peak. So let's have a look at 2017. So in 2017, you can see around this point, if we look down and hit the MACD, you can see it changes into this bullish momentum. You can see we've got a bullish cross, and we do get bullish momentum. So you can understand why everyone gets so excited that the bull run is back on, because all the indicators are turning bullish, and that's true. But then we end up hitting our head. Now in 2017, we hit our head on this downtrending line from these top two peaks. Now that kind of looks familiar. So this is where we are currently in 2021. We've had the bullish momentum, we've had the bullish cross, we've got the MACD is looking bullish, we're going up, but then we hit our head on this downtrending line that's marked from these 2 points. Now, I don't think 2013 was exactly as picture perfect as that, but let's just have a look. So again, we got to this point. It's pretty similar. Look at it. We've got the bullish momentum here. Things turn green. We've got the bullish cross. In fact, we even had it back here as well. There's a bit more bullish momentum. So you've got the bullish cross and you've got the MACD going green. In fact, you had it here as well. But it doesn't mean that the bull run is back on. It just means that we've got bullish momentum and we end up hitting our head at a certain point and then it reverses again. So that's something to just keep an eye out for. So it's so important when investing to be risk adverse and be defensive rather than just hope that the bull run's back on. Let's pump in a bunch of money and let's hope it's going to go to 100K or 200K or 300K just because we see some bullish indicators. So it's just something to be careful of. I'm not saying it's impossible for this to do something that it's never done before and do that. I'm not saying it's impossible. I'm just saying that based on past history, it's never done that before. We've always had these same bullish indicators and we've always hit our head. So we just have to be careful, have stop losses in place in case it drops, and just be aware of other scenarios. It may go up higher or it may go down. There's other possible scenarios that may happen. Okay, so that's the fourth thing. And the fifth thing that we've always done, once we have changed into some bullish momentum and gone above the 50-day moving average, which is this blue shaded line, what we've always done on every other bull run is we've always gone above it and then below it again. like this. So we go above it and then we go below it. And the averages always look like this. It goes up or down and then it does this sort of thing, a bit of a wave. And then we go up above it again and then we go down below it. And then we go up above it again and down below it. And each time we end up losing energy until we peter out. It's very much like a wave in the ocean. So it's like a surfer. This is a surfer on the wave and they fall through it. They get dumped and then they come up for air, take a breath. Then they go underwater again. They come up, take a breath. They go underwater again, take a breath, and then the wave dissipates and they can finally breathe. And that's the point when the market bounces up. And if you've seen my other videos, you also have to, this always coincides with a stock market correction, and it's happened on every single bull run as well. So you have to check out the other videos to see that. It's too much to explain in this one video. So that's something we've done in every single bull run. I can quickly show you. Let's have a look at 2019. Oops. You can see that we go above it and below it every single time. Above, below, above, below, above, below, above, below. Okay. Then 2017. At this point, we get the bullish momentum above it, then we go below it again. Above it, below, up, 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 up. And 2013 was the same. Okay. So you see below it, above it, below it, above it, below it, above it, until it peters out. So anyway, those are 5 things that we've done on every single bull run. And right now, on the 2021 bull run, we have done 1, 2, 3, and 4. And we're just waiting to see whether the 5th one plays out, or whether the cycle does something it's never done before. And it's not impossible. It's not impossible, but it's never done it before. And that is to turn around without bottoming out on the 200-week moving average, turn around and go back up again. So we'll have to see how things play out over the coming weeks and months. But I hope you enjoyed that video anyhow. So I've got plenty of these videos coming out. I love doing these in-depth macro level analysis videos. So I hope you enjoyed it. So until next time, my name's Tim, and cheers.